Good morning, everyone, and welcome to Nadex Morning Analysis, where we take a look at what's moving around this morning and some potential hotspots in the markets. My name is Todd Rich. I'm with Nadex. With me, Brian Caprice from Keep Trading Simple. Before Brian and I jump into what's moving, and there's not a lot this morning, I do need to quickly share that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We're doing this for your education purposes. Now, I mentioned there's really not a lot going on. If you look over the calendar, and Brian will run through some of this, Canada's came out with their inflation numbers. They've got inflation. Surprise! Guess what? Year over year, inflation's going up. We're seeing that everywhere. They're not at 4% yet, but they're certainly getting close. We've also got oil inventory reports later this morning, and then the big news today is everyone's waiting for those FOMC minutes. So that's going to be an interesting time during the day when those minutes get released. So let's jump over to the charts, and I'll flip this over to Brian because the Canadian dollar, because the Canadian dollar, because Canada came out with their inflation numbers. We're going to take a quick look at the USD CAD chart. We'll poke over. Gold's been moving around a little bit, interestingly enough. We could, you know what? And then I think the last thing we'll do, because we have oil inventory reports, we should just at least take a look at the oil charts, knowing that we got that coming today, and then maybe a quick rundown of some of the equities, knowing that we've got at 2 p.m. the FOMC. So late in the day, those FOMC minutes come out. The market could be volatile in that last hour of trading. So with that, Brian, I'm going to flip it over to you. I'm going to move your chart on, and we could
Sure.
start with Canadian inflation
Yeah.
news.
So we mentioned yesterday about how CPI is kind of one of the driving forces right now with where we are. We actually started off early morning yesterday. If you remember from yesterday's presentation, we talked about how the pound was pretty much getting kind of beat up, right? It was down pretty big. Today, the CPI number actually didn't come in as high as expected as well. It came in a little bit lower. And again, not necessarily bad. The difference between 3.2 and 2.0 in this kind of economy right now, not really that big of a deal. But you're seeing a bit of a retracement. You're seeing the euro pound down, pound yen up. Pound dollar a little bit off, and again, that's more of a dollar play than anything. Rolling to 8:30 this morning, just a little while ago, you can see that the CPI month over month was double what they had expected. The only red that we had was the common CPI, and that was a yearly figure. And again, that was fine, but the medium and the trend you can see are both well above as well. I mean, the 3.1 over the 2.5 is also kind of bigger. And again, there's a bunch of small ones in here you can kind of see, but the main one that everybody is looking at right now about when they're going to move forward is this month over month number. Now, Canada is kind of an interesting situation. They were actually the first ones to verbally say they were going to start kind of tapering the support, and then kind of it stopped. And then again, New Zealand kind of took their first steps, and then they were supposed to raise last night, but they didn't. So the question is, with this inflation, is CAD getting to the point where they're starting to get kind of nervous? It's a very interesting situation. I don't know if, and again, I didn't see it. It went under the headlines. My wife told me yesterday as well. They are now doing, where is it? I had it over here a second
Snap
ago.
election.
Yep, snap elections. So
Yeah.
for those of you that don't know what that is, basically they have the ability to call an election anytime they want up in Canada. Trudeau, last time they basically have a minority government. What that means is they don't have just two political parties up there. They have multiple parties, and then they have to form kind of like a coalition of everybody. Again, it's a great system because you have to kind of agree with each other. It's not just a black and white issue. He's calling an election right now because he thinks he has enough sway right now to go for basically to use COVID to get a majority government. It is what it is. It doesn't really necessarily change much. Besides, he has a bit more control when he has a majority versus a minority government. I can tell you, I'm not a Canadian citizen. My wife is. She's like, this is extremely selfish. He got in trouble last time with a bunch of different things going on, and again, did not win the popular vote last time. We'll see if they're happy with the rollout or not happy with the rollout of the way the vaccine. So, I mean, kind of one of those things. It is what it is. But again, that is right now kind of the main driving factor for the CAD. If that wasn't going on, this CPI number would have given us great CAD strength. You can see right now, dollar CAD is basically at zero. It was red for a little bit as well. Again, what it's doing right now is it's fighting a strong dollar. You can see that dollar strong, dollar strong, dollar strong, dollar strong, dollar strong. When you have strong, strong, it's like, two rams smashing into each other. And that's kind of what the Canadian dollar is looking for right
And it
now.
goes
Yeah.
sharply
So
sideways.
yeah, and it happens, but if we get suddenly dollar weakness, the Canadian dollar will be in a little bit more of a strong position now. Inside of a chart, and now this is a 4 hour chart. It looks very, very busy right now, but the reason I went back up to a 4 hour is because you're looking at kind of grander kind of forces right now versus the small intraday pieces. And that kind of crafts what we do on an intraday basis. And again, I'm trying to incorporate in as much as we could. And again, there's a lot of zones in here, a lot of big candles and things like that. But this is a 4 hour chart. One thing of note that I wanted to bring up here, and again, we just did this presentation. If you're to draw your fibs, I mentioned in that presentation that the 50% is one of the larger ones. I don't know if you can see it or not, but we're between this blue and the green right here. This is the 50%. Actually, I put a horizontal line so you guys can see it. There is your 50% Fibonacci retracement from the recent high to the low in the 4 hour. We're right there right now. So it's one of those things on a larger time frame, on a 4 hour time frame. We are kind of up in an area where people are going to look at that. And you can see it did push through the top a little bit, right? And again, it's one of those things that it's like, should we be in a position where we're shorting right now? It's a very common technical place for us to short. So, with that said, we'll take that off. Let's go ahead and take the fib off there. Make sure I delete the right one. There we go. And we'll drop it back down to a 30-minute. So on the smaller time frames, again, something that's a little bit more tradable today. Yesterday, we talked about how we had that decent Harry Potter. We had 4 touches. The 4th touch went through. It came up at base. That pulled back, and then it went higher. So we'll delete all these things over here to make this clean again. From where we were yesterday, we're basically flat, and we just saw that over here, that it's minus 1 pip in 24 hours. We do have 2 decent levels, though. We have one level up top that was formed yesterday, and this was the spike that occurred right at lunchtime, and then it was kind of a retracement before FOMC kind of rolled it back to the downside. And again, we almost got another entry, but 126.42 is an area that I'd watch out for. You can see the candle right here, that spike, that was the CPI data, but again, it's being parried by strong dollar as well. And there's 2 levels I'd watch out for. One, we've kind of pushed deep into it, and this was an area of interest level that was an old area of buyers and sellers in the past. And you can see it based in there, and that's what it used to come off of. That was our prior selling area before we had the 4 hits. So I would say that that's kind of a target more to the downside. It is approximately 30 pips from where we are right now. On a fundamental basis, yeah, this should come down and touch it. Question is whether the U.S. trader or not is going to acknowledge that. Right. With FOMC notes today, and again, there's a lot of things going on today. This FOMC meeting note is also putting kind of some molasses in the cogs there because, again, people are saying, well, what is he going to say, right? I mean, he talked yesterday and didn't say much, but FOMC meeting note is different than a speech. Are they going to talk tapering? This is the official notes, right? Not just the speech. Are they going to start doing tapering 3rd quarter? Are they going to do it 4th quarter? This is where it would all come from. So unfortunately, there's a couple different things that are dragging on this one right now. But I think if we can get to either of these 2 levels, it's probably decent long or short. It's right in the middle right now. I don't really know which direction it's going to head in, the 126.42 or the 125.74. Fundamental wise, it should head down because of that most recent data. But we know that, again, with FOMC, it's kind of everybody, the talk for the last week has been this taper, when the taper is starting. Not that interest rates are changing, but the taper. I mean, that's all we've heard about for the last week. This FOMC meeting notes is the first official time where they could give us a clue of, this is their release of what they figured out for the taper. So
I feel it does get interesting because you got, the Canadian dollar data. You would expect it to do one thing with their inflation data, but then you've got the U.S. dollar news coming into the equation as well. So there's a bit of a battle going in. Mm-hmm. Before we jump over to gold and maybe even take a quick peek at oil, you did mention something. Let me delete this off the chart. Brian was mentioning those Fibonacci's. This is that 4-hour chart he had up here. Just quickly, I just want to show you how he drew that. I do like to do a quick little lesson. I'm going to Fibonacci retracement, and you start in the upper left-hand corner because we could see this was in a downward trend. 1 click, I come down to the bottom of down where the lows. 2 click, I drag this over. 3 click, and as you can see, right where we are right now, we're right at that 50% retracement level, which tells us, well, what's going to go on? We don't know, but it sometimes it does help you do a little bit of analysis. I just wanted to show you how to drop those Fibonacci's right on a Nadex chart, in case anyone was wondering. All right, Brian, I'm gonna flip back to you. Let's quickly take a peek at gold and maybe oil,
Yeah.
and
So
if we got time.
yeah, gold for me is let me go back down to the lower time frame. Gold is kind of it's a bit more boring right now. Yesterday we were looking and we were hoping that they were going to mention something about inflation, and we really didn't get anything in the
Nothing.
speech. Today with FOMC, maybe we can get something. I mean, the market was, basically pushing it down, preparing for a buy, and we were talking about ways that we could punch through the top. If we got through 1800, that would be a really big psychological level. All the news media would be talking about, well, we're above 1800. That's it. We're going to 3000 because that's kind of how the two work. It's, we go up 5 points and it's like, yep, we're going to 3000. We're doubling because it broke 1800. It's not there yet. And we're really, I mean, if you look to see where we were yesterday, I'll go ahead and put a circle out there. Let's see. Right here is where we were yesterday. So you can see here's where we were yesterday. Here's where we are right now. It really hasn't moved. We pushed down a little bit, kind of stomached everything that, Powell had to say yesterday, and it just kind of ground right back up again. And then again, it's kind of just there. I would still watch out for that 1796 level. Again, it hasn't been touched. It's been front run a few times. If you're looking for kind of an aggressive entry today, and this could be one of those aggressive things before FOMC. And again, if you're not an aggressive trader, don't use the smaller zone. But if we have pushed up, FOMC is coming in right here, right? If we are kind of sitting in that level, it's right there, 2 o'clock. If we're sitting right there, if we just do nothing really, right, and we're sitting right there before news, on a technical basis, that is more set up for a short, and I would go into a shorter duration binary contract to be able to kind of trade some of those things. Problem with this one is, if you guys look to see when the gold market closes, the gold market closes in short succession for Nadex, short succession after this release. So it's one of those things that we're kind of getting cut off on there. But again, with gold going down, you can flip it over and change it, trade it with some of the indices. But
Right.
it's just one of those things. Timing wise, it doesn't, because it's a late in the afternoon. It doesn't match up for a lot of the ways we do like the news trade. Obviously, in futures and things like that, there's different ways that you can trade it. But like I said,
Yep.
just be cognizant of when that market closes.
Yeah, and the other thing I was just going to mention, because gold is also in the news today, in for a different reason. We've got some of these technology companies. Tesla kept on getting in and taking on other assets outside of their traditional business to diversify, and they're playing around with Bitcoin. Uh, Palantir, another one of it's a data software company, also part of Kathy Wood's ARK uh, ETF, and the company is doing well. The company is doing great, and what are they doing with some of their free cash flow to protect for a black swan event? They just bought $50 million worth of gold coins. So it's interesting because companies will often do that. They'll move their assets around to something else to protect themselves. And Brian and I were talking about, usually they might just move it to a different currency. Right? If you're doing global business, you might move some of your risk, if you're concentrated in a particular currency, to a different currency, just so you've got your money stored around in different places, so that everything, you don't want to have all your eggs in one basket. Interesting that companies now are getting into the crypto space, not necessarily to conduct business, but to store some of their cash. And now you're seeing those same innovation companies, some of them battling it out. Like, I don't want to put it in crypto, but I will put it in gold. And that's just, I thought that was kind of fascinating. It was only $50 million. It's only one company, but it does get kind of interesting when you've got companies moving outside of their traditional business to store assets in some of these commodities. So you'll see gold in the news today. Let's do oil real quickly, because we
Sure.
do have
And
that
let
oil
me just
inventory report.
Yeah, let me point out real quick too. If you guys are looking at the trade list, remember a lot of the binaries and everything like that are going to close at 1:30, which is right before this one. Knockouts obviously do not close because of the duration on there. There is what, three days to go. What's the official? Yeah, 2 days and 4 hours left to go on this one. There actually is a knockout bracket or knockout option up here at 1795. So for those people that are more aggressive, if we are pushed up into this level, there is still some way to trade gold using Nadex. All right. Yeah, as far as oil goes, here's our whoops. I don't know what that is. here is what our API numbers were from yesterday. Remember, the API number is the industry specific report, basically meaning that if they kind of make the numbers a little bit off, there's no recourse or anything like that. But showing that again, there is a very small minor reduction, right? I mean, the forecast is was to be down 1.25. The actual came in at minus 1.16. So it is a red number. It's not a huge red number as far as oil goes, but just be aware of that one. If you look at that one on a chart, you can see that really it's gone up a little bit, right? I mean, again, it's a reduction, right? It's a reduction from yesterday. That report came out right in this area right here, and all it did was kind of rally it back up again. So yesterday, we've been talking about how we have this view of which direction we head in. For the most part, again, we've had the two big ones. Yesterday, if I had to draw this one's kind of hard because we started in the middle, went high, closed low, and then ended in the middle again. And it kind of did the same thing. The U.S. session yesterday, oops, I'll make that bigger. I'll use that for a second. We started here, right? We went all the way up, grabbed the level sellers, went all the way down, and then came back up, and we closed exactly where we kind of started the U.S. session. So kind of more of a funkier kind of position. And then again, today, same thing. We opened here at 3 o'clock and we're kind of closing right here at 8:30 at the same exact spot. So I would say the overall trend though on this one was up, right? If I had to pick kind of the direction that it was going in, I would say yesterday, I would say this is probably more down. Top to bottom is what we hit first. And then we had, obviously we started low, went high, and then came back down. So I would say for today, it does look like it does appear that it's looking for more of a kind of a short scene today. The API number would kind of justify that a little bit, right? Being not as being not as bad. But remember, that is an industry specific report. When we get the EIA number today, it could be a little bit different. But I would say right now, I would still watch out for that level up top. Again, that short was in there from that parabolic move yesterday. I would say watch out for the price level up here at 67.62. Right, that's an area that again well supported there.
Yep.
Again, spike up, one touch, came through, grabbed it, and then shot back to the downside. As far as buyers go, again, we knew we had those levels down there at 65.
65.60.
Yeah. There's a small group down here at 66.53. I would say, you can see that it's been flirting around with it. I'd say watch that little zone right there, but that would be one of those ones that if we come right down to it right before news, then yeah, you could probably. Yeah. It's tradable, but we really got to get some help with it to see if we can get down there in time. Now, remember, the oil inventory report today is at 10:30. Remember, we've kind of covered this in the past, and I've done an official how to trade it yet. That's probably going to be the education summit in September. Basically, we want to drop this down to the lower time frames. Drop down around 10 o'clock. Get down to the really. I mean, you're going to do it on the 5 minute and the 30. Look to see if we're in any type of a stabilization point. You could potentially use, dropping it down to like say a 15 to do the analysis. Let me delete this to get this out of the way. We could potentially use this as a level, if we're there, and then drop. What you should do is go down to a 5 minute chart, go see if we're in a level and see if price stalls. And what I mean by stalls is drop it down to like a 1 minute. If it just basically goes sideways for like 3 or 4 candles and doesn't move, and you're like tapping your screen to see if it's still working.
Is it awake?
Yeah, that's what I mean by stalling. If it stalls inside of a zone, it typically is a telltale sign of what direction it's going to move in, particularly if it's inside of a zone. I do it with my students, and I think eight or 9 out of the last 10 have all gone in that direction for a 1 to 3, sometimes even before the news release came out. So it's one of those things that it can be very, very quick if you like those shorter duration trades. See what you can grab in there. And it's funny, on the 15 minute, you're like, oh my God, look at this strong trend up. Yeah, it's going, but we're not really right now at 9 o'clock. Well, we got to see what the big sellers,
Right.
buyers.
It's always an if this then that. So you really do have to do that analysis, and that's in an hour and a half. So you just got to kind of see where we are. It is interesting enough. I'm just looking at the chart that we've had, and I'm going to extend these. These are the same levels that we've had from earlier in the week. I mean, these are the ones around it. You might find some other levels inside there, but those key levels, basically 65.60 below and 67.60 above, are the key levels. There might be some other opportunities. Again, got to wait and see where we are. I know we've gone a little over. Did you want to just do anything on an indice before, just knowing that the FOMC is coming out at 2? Is there anything that you wanted to throw out there quickly?
Yeah,
before
I
we
mean,
call it
I
a
wouldn't
day?
say there's anything too exciting right now. They're all down a little bit. You can see that again, NQ being the big one that tends to move. Yesterday, we were looking for a push up. And again, this is how it works sometimes. And this is why it's important to have these levels. I mean, we were talking about a big push up for FOMC. I mean, it ended up moving a little bit early. Right now, we're really floating and we're hovering right around that 15,000 mark, which we know is an equilibrium point. Three
Right.
zeros is a lot of equilibrium. And right now, I mean, it's, we're at 2175 in the Russell. Again, equilibrium point. This is at 15,000. The Dow's up at 35, 175 ish. So again, that one's a little bit above where it's equilibrium. But right now, they're all waiting. And again, remember what FOMC says today is kind of a big deal. So what my recommendation would be is look to see what the opening does. See if you can find something in a kind of a near-term pullback right at 9:30 on the 15-minute charts. By 10:30, look for a reversal, and then it'll probably flatline at that point and until FOMC. But the same thing I just explained to do in oil, you can do the same exact thing for FOMC notes today. Them starting tapering sooner rather than later definitely is, I would say, more negative fundamental based news for the indices. Just because, again, when you stop supporting the economy, it has to stand on its own leg, and typically it's
Right.
it's kind of like when you take training wheels off of a bicycle, right?
It's
You
gonna
may be good with the
wobble a
training
little
wheels
bit.
on. You're going to fall once or twice until you kind of make that adjustment. So, I would say that overall, it's probably going to be something about taper. And they mentioned that they're not going to taper till next year, and it's like super dovish. Then again, all these things should go green, and we should have, we should definitely end on a green day. But like I said, I don't have access to the FOMC meeting notes. I don't know what they're going to say yet.
We're gonna have to
That's
work
why I
on
put
that.
the chart up.
Let's give
Yeah,
Jay a
I need an
call and
inside
say,
man. I need an inside
"Hey,
man. Somebody message Todd
hey,
with that
Jay,
information.
throw us a little love. Let's see what's going to be in there." All right.
Yeah.
So yeah, very important today. Those FOMC minutes at 2 p.m. Eastern. With that, any questions for Nadex, please email us customerservice@nadex.com.
Mhm.
Brian is also very accessible. If you've got questions for Brian, please feel free to email him support@keeptradingsimple.com. We did. There's not a lot going on, but we did still cover quite a bit. Went through. Uh, I'm just going to stick with the U.S. dollar and the Canadian dollar battling it out. We had some Canadian economic data, but we've got the U.S. Uh, FOMC minutes coming out, and so there's a battle going on how that pair is moving around. We'll also see potential volatility in oil, 10:30 a.m. Eastern. We'll get a glimpse of those oil inventory reports. Uh, without anything else going on, if we're depleting oil way more rapidly than we would expect, you could see oil move because it would be showing demand for oil. If we're not using as much oil and we're not depleting it at a rate that was around what was expected, and that's actually more likely the case, demand starts slipping, you could see price slip with that. And then, of course, the FOMC, 2 p.m. Eastern today. We got to see what's in those notes, and everyone is going to be treading lightly until we do get a good glimpse of them. We did go a little long today, but with that, I mean, why not? It's summertime. Want to wish everyone good luck in the markets. Brian and I will catch you again tomorrow morning. Thanks, everyone.